Shall we call your co-panelists? Okay, you can put that on me. Pranav. And sorry if I'm saying these names on the way to being properly. Raghav, Vineet, and Gurraj, please join. Big round of applause. Gentlemen, looking sharp. All right, Nikola, the stage is yours.
Yes, here we go. Gentlemen, please have a seat. So welcome everybody who is still here and has not left yet. I very much appreciate it. And I'm sure this is going to be quite an interesting panel because I believe that the topic that we're covering today kind of summarizes what we have heard so far. We were talking about gamification. We're talking about regulatory aspects, exchanges, investment opportunities in the region, regulatory, legal, and so on and so on. And now we have a panel together where experts from the actual VC space and investment space will be able to share their opinions. So I would kindly ask you to quickly introduce yourselves with the standard MO, but also please share with the people that are here one thing that if somebody Googles you, they would not find out about you, please.
So first of all, it's a pleasure to be here and always be here at Agora event. You know, Hadi is somebody I really look up to.
Absolutely.
And of course, you as well. We have interacted multiple times in the past in India and multiple hackathons as well. From my side, I represent Woodstock Fund. And as the name suggests, you know, Woodstock as a journey, it was supposed to be a small event, a musical gathering, but which became a movement. In our experience, blockchain has also become a movement now, and people from various walks of life, you know, various aspirations are sort of converging here. So we started a journey in 2019. Since then, the first fund has massively scaled, and we are focusing on the fund 2 right now, which has a US structure and a non-US structure. And we got to the first close and we're focusing on the next close as well. From a focus perspective, we have built an east to west corridor. So deep roots in India and presence in Middle East, as in Dubai and ADGM, as in Abu Dhabi. And I would say a fund in West, which is in US. So that sort of, you know, is a corridor that we are focusing on as a fund. Extremely excited to be here.
And something that people would know about you if they Googled you?
I mean that's what we hear in India, and we are definitely keen that more people know us in Middle East as well. And of course, these panelists who are out here, they are more famous here. So as we are here, we are definitely keen to see all of you. We are woodstockfund.com. That's the way to check us out, and definitely from a Twitter perspective, once again, woodstockfund.com. So,
okay, Raghav, moving on to you.
My name is Raghav Jerath, better known as Reggie. I represent Ghaf Capital Partners. Compared to the rest of the VCs here, we're relatively newer. This might get the best. We started this year at the beginning of 2021, but we've been in the blockchain space for quite a while, including the Link ICO, Ethereum ICOs. We're led by Sheikh Mualla from Al Quain and Tara Club Tour as well. We're 7 partners based all over the world, but we are UAE homegrown, and I would say have one of the best deep-rooted connections in UAE. We're always looking out for innovative companies and innovative projects, developing the new best thing. In terms of what we do and what we're looking for, it's what's the next best thing. Honestly, right now, we've been looking at a lot of NFT, metaverse, as everyone would be. And I mean, I'll leave it later to the next questions.
Okay, thank you very much. Gurraj, can I please ask you?
First, it's wonderful to be here. It's been a great Congress so far, and expected to be tomorrow as well. I'm Gurraj Sangha. I'm the Chief Quantitative Investment Officer of Tokenmetrics Ventures. It's a cryptocurrency hedge fund with multiple strategies. We have a private equity component as well as a quant component, and I manage both teams. Tokenmetrics is also a research platform in which we, study protocols from all over the space and try to find, as you say, that the next moon. But the space continues to evolve. We've seen quite an evolution over the past several years And you know, what's interesting is that it's very dynamic. I mean, you know, DeFi summer began last year. As the last panelist talked about, it continues to grow. You know, gamify, the DAOs more recently, NFTs. I think that's one of the most exciting areas to be in. And you know, my background extends to legacy markets as well as this market, and I can expect the innovation to continue in the future.
Thank you very much. Please.
Hey guys, good afternoon. This is Vineet. I represent Phoenix VC. Phoenix comes from the mining background. If you go down Sheikh Zayed Road, you'll see the Bitmain showroom. So we are the guys who are one of the biggest partners for Bitmain in Middle East and Africa. We've done the $400 million and the $600 million orders recently. So yeah, coming from the mining background to more of DeFi, because miners never like to sell their Bitcoins. That's how our journey began. And finally into the VC space, where we built a fund that has done a close to a 50x in the last 1.5 years. This is realized 50x, not bullshit, blah, blah, 50x. We did Casper, we did things like Star Atlas. We just did 2 rounds on Spacey, $1.5 million. So that's us as a fund. We invest in new projects from the seed and private round. Personally, I started as a speculator, became a degen, ended up becoming an investor and a VC investor, and enjoying the wild west of crypto till regulation comes up in the next 4 or 5 years.
Thank you very much. So before we continue, please let me pick up that call that I have. Excuse me. Hello? Yes? Crypto pumpkins. Really? Different faces. How many are there going to be? 10,000? Are we doing this? Yes or no? How many are going to be built? When is it launched? What is happening? This is pretty much the key challenges and key trends that we have seen in 2021. And you started off very nicely, Pranav, and I remember that when I know Bijan for quite a while, and I remember when you guys were starting off, so congratulations on the success. But 2021 was a very interesting year. We saw how the DeFi space exploded. We saw how gaming started setting up some kind of baseline. I wouldn't say it's anywhere near to being useful yet. And we saw how NFTs actually started growing in popularity. And it would be very interesting for me to see how you guys, or how those NFT, DeFi, and gaming fit into your strategies. And more importantly, how do you put them into this region here? Because the GCC area in itself grew, I would say, over the last 2.5 years. I mean, Hadi, you were one of the people that was first here, so thank you very much for that. But it started off very recently here compared to Miami, compared to other places in the world. So why here, and how do you guys react to those trends? So whoever wants to go first.
So probably I'll just take a dig at this. So from a fund perspective, we have a thesis around 3 areas. One is convergence of technologies. I mean, of course, multi-chain is a future that we believe in. We don't believe that one single chain can rule it all, because different designs service different kind of markets and different kind of applications. And essentially, the action is going to shift towards the application layer. And blockchain is an embedded technology. It's not a front-end technology. So over a span of time, as the ecosystems grow, etc., the application is where the real value unlock will happen. The second thing, which I very briefly touched upon in the introduction, is the convergence of cultures. So right now, let's say if you look at people in different, let's say, I see even in the audience, different kind of people, even here as well. And right now, there are no boundaries in terms of how we collaborate and how we sort of, even aggregate resources like capital, talent to make things happen. And a lot of these things are going to accelerate a lot more. And this also partly answers your question, Nikola, wherein if this kind of convergence is happening, then GCC can become a melting pot, wherein the product management capabilities of the West and the talent which is sitting in the East can all converge into amazing infrastructure out here, and very clear focus of the administration to focus on creating a knowledge economy. So that's how I see Middle East. So convergence is number one. The second is financialization. Now, financialization means that the liquidity right now is centered across various asset classes. So real estate liquidity usually does not flow from real estate to capital markets and vice versa. It is usually stock rather than flow. So as tokenization, as DeFi, as compliance, as regulations, become much more, you can say, proactive, they create enabling frameworks. We'll see that financialization of any and every asset will become a norm. So in that context, once again, GCC stands to benefit, and of course, UAE stands on top of it because it has the right kind of infrastructure to build those kind of rails. The third area is virtualization. Virtualization makes a lot of sense. Of course, metaverse, thanks to Mark Zuckerberg, has become a buzzword. But this is something that a lot of us has been focusing on for the past 2.5, 3 years. In many ways, when we started using the mobile phone and started putting, let's say, more than half an hour into mobile phones, our journey towards metaverse actually began. So it is now the enabling hardware and the software exist, and blockchain provides that incentive layer and the framework for trustless transactions to happen. So from a fund perspective, we are completely focused on these 3 themes. And just to square up by answering your last question, GCC stands to benefit, and especially UAE stands to benefit from all the 3 because of amazing infrastructure. What these 3 things require is a melting pot for the talent to congregate, for right kind of capital to be flowing into these pathways, and for creating open and sort of an enabling frameworks from a regulatory standpoint, as well as from a technical standpoint, for people to effectively build world-class solutions.
Thank you very much. Raghav, I mean, you're based here for a while now. So what are your thoughts on that?
As a fund, I think we've been looking on, we split between NFTs, metaverse, play to earn quite a bit, but I would say we're focusing a lot more on the latter right now, with a large focus on projects and companies within the Solana ecosystem that are coming up, because Solana is what, this is our personal opinion, is what Ethereum was back a few years ago. You're seeing those applications, those tools being built out now, and that's what we want to back going forward. In terms of local GCC UAE, we have a very large youthful population that are into gaming. So you'll see play to earn become big here, and we have those connections, those ins with these, let's say, communities out here. So we believe it's going to blow up in GCC, Middle East region very soon.
Do you, one question that always pops into my mind is, you have a team of entrepreneurs that comes into the space, into the GCC area, if they choose Abu Dhabi or Dubai or something around those lines, they start off the company. I don't believe there is enough tech talent which is based in the GCC area. So what are your experiences there? Where is it mostly being sourced? Is it out of India? Is it Eastern Europe? Is it the US? What do you guys see most?
It's interesting because it really depends on the capital the project has. So if the project is, let's say, a little, they don't have that much capital, they're using developers from India, where they're a little cheaper. If they have a lot more capital, they're using developers from, let's say, US, Western Europe, et cetera, going forward. But in terms of actually moving them and housing here, because ADGM, DIFC, they have some schemes where if you bring them here, they provide grants, et cetera. That's starting to happen, but not as much as you'd like to see going forward. But I'm sure it'll accelerate. But again, being blockchain and the crypto, most of these developers are decentralized and on demand.
Absolutely. Who wants to go first? I don't know who's holding the mic, so please.
As to, I think you originally were asking about some of the way we kind of look at the various opportunities. There's a mention of convergence and emergence, a couple of different areas. We also look at disintermediation, and particularly in a couple of different areas like value adoption, emergence, rise of stablecoin, use of NFTs as a form of transferring value. There's the social component to how things like NFTs and also to a degree, convergence across different areas, represent not only a transfer of value across sort of space time, but also, represent one sort of cultural identity, that can be adopted and also transferred. This region in particular is growing. I mean, myself and my partners have been here several times over probably the past 7 or 8 years, and the transformation has been extraordinary. And I think in part it's because the largely friendly, pro-business, pro-crypto, I don't want to use the word regulatory too loosely, but sort of regulatory framework. And I think the authorities have been very forward-looking in that respect. And I mean, we see some of the changes happening, for example, out of China, and how there's been this tremendous crackdown, which you've seen, like a huge amount of the Bitcoin mining capacity leave and no disruption, and that in and of itself should speak volumes. So if you're going to make a choice, it's good to be in a much more friendly type of environment. And it's allowing a number of different companies, startups, protocols come to this region for that alone, and that's going to drive growth. From a technological perspective, also bring talent back to this part of the world, which needs a home.
Thank you very much. Vineet, man, I'm quite excited about your answer because you guys have been incredibly active in the space here in the area. So I would actually want to hang on one more question after you answered the original one, which is, what are you missing right now in order to have it even better, to have a better platform, to be able to make more investments, to attract more projects, and to deploy more capital?
So I'll answer the first one on the NFT first. So for me, NFT is more of a gray matter area. You have people like CVVC and MR trying to make NFTs out of real estate to do some real logic work, which is selling real estate. You have people like Engine, which are making NFTs out of Minecraft that can be used to play to earn. You also have people who are making Picasso paintings into NFTs so that you can earn digital money from it, from the digital rights. And then you have these kids who are making, like 6-year-old kids who are making some shit, which is selling for millions of dollars. So, for me, it's a wide array where NFT comes into place. Nowadays, when you talked about gaming, for example, and there was a gaming panel before this. We all know that this one of the games, I forgot the one where we make those lines, and I forgot the name, Candy Crush. People said that the guy took 6 games to make a Candy Crush. He failed in 5 attempts. And nowadays we have projects which are doing 1000x on just starting up. Axie Infinity became big. Then Star Atlas did a 600x. I invested in Star Atlas. So point is, every game is not going to go crazy, but it's just that the amount of retail that is coming in and flowing in cash makes it a gray matter area. Will all of these games succeed? I don't know. So now on the value that it comes to the Middle East per se is that, if real application comes in, like how CVVC is building the real estate part of it, I think it will help the economy quite a lot, because there are a lot of assets that can be built into these non-fungible tokens. Now coming to the second part, so NFT gaming and metaverse as well, because if we all remember, when we were 10 years back, we had Second Life, which never took off. Everyone was hyping about it, and then it failed. So point is, I think they have value, but again, only time will say. Finally, when it comes to investing in projects, luckily, all the funds that I'm associated with have created a network of 150 plus VC partners, and the good deals actually come vetted from this platform, rather than, there's no single platform from where, not like a Republic, which comes for a public sale, where these deals are checked by done enough due diligence. But we have partners like Alphabet, we have partners like Master Ventures, LVT, and they come up with the whole due diligence, and our deal flow comes up with them, and that is the reason why that 50x ever happened. So for us, we don't have any issues with the deals. I'm analyzing 150 deals at the moment. We did close to 30 investments worth over $14 million in the last 1 month. The biggest one was yesterday, Portal DeFi. We invested around $1.2 million. So not facing these issues, but yes, some people might need a platform for us.
Okay, we talked about opportunities in the space, but now let's get down and dirty, as they say. At the end of the day, we're investors. If we're builders and investors, or purely profit-oriented investors, once we do an investment, there needs to be a part where we also take profits. Now, the interesting thing that has come out as an opportunity, if you leave the equity part aside, are the tokens in itself. And what I have witnessed in a lot of cases was that you use stable coins in order to de-risk your portfolio, keep cash afloat, and just be able to provide liquidity back into the market. How do you guys, if you work with this, what are your experiences with this? What are your go-to stable coins, and how is this working here in the region?
So probably, I think once again, a round robin here.
You don't have to go in one round, please.
So let me take this up. So here, I think, so let me look at stable coins from various angles. So first angle is, what are stable coins? So I think one way of looking at it is they are cryptocurrencies. Other way of looking at them, they are cash equivalents. So people who are accountants here in the audience, they would understand that anything which is cash equivalent goes through different kind of regulations. And this is where the whole debate and the discussion is happening, whether they are just tokens / cryptocurrencies or they are actually cash equivalents. And my own sense is whether you're algorithmic stablecoin or whether you are centralized stablecoin, eventually the regulations will cover stablecoins. So that is one thing which is for sure. That means you need to be backed by actual assets, and largely these assets has to be cash equivalent. Because as somebody who is literally a processor, you need to be one-to-one secure. So a lot of pressure is going to be there on stable coins to have their treasuries audited, and their treasuries being largely liquid treasuries and not by munis or any other riskier assets and so on and so forth.
You think that's a good thing or a bad thing? Because at the end of the day, you have LPs or you have the funds, which means that one way or another, something needs to come in. You can't continue putting in and continue diversifying.
So I think it's a great thing, and I'm just putting it out, and I know a lot of people may hate me for this, because in my opinion, if the regulations for stablecoin don't come, they will deter the remaining 99% who want to be part of this space not to enter into this, because this is a single most important risk. And if any stablecoin collapses, the collateral risk and the contagion risk is enormous. So even in our fund, we have like an independent risk committee. This is being set up by a gentleman who wrote the AML policies for Stancy and Citibank in India. So this gentleman, eventually we've identified 2-3 risks, which are the dominant risk in this space, and this is one risk. But I think the good thing, what is happening, especially in the US, it is setting a tone in terms of building very affirmative regulations. And of course, the community is also responding in a certain way, and these things are, coming through in many ways.
Okay, Vineet, what do you think? Let's mix this up a little bit.
So stable coins has been the biggest gift in this season, because both on the ICO part as well as the VC part, because when you remember in 2017, ICOs raised millions of dollars, and next day they knew they only had hundreds of thousands of dollars in their wallet because Ethereum crashed down.
I remember multiple projects, by the way, that we also seeded where when there was this crack, there was a 60% breakthrough in the value of the investment, which literally shortened by half or more their entire runway. And there was nothing that can be done.
And as well as for on the VC investment size, booking profit never makes you lose money. So for example, when you said Bijan never sells. So in fact, I had one of the project teams here and I said, oh, I just saw yesterday that we have your tokens. What do I do, sell or not? He says, just hold. So
he never does.
Yeah. So what I'm trying to say is that stable coins is the best way for both of these companies. For startups, why are they raising money? They're raising money for the runway to build a project. For them, the token price should be inconsequential because they have raised $10 million to do something. Just focus on doing that something. If that something has value, your token price will rise. For VCs, booking profits is critical, and then we all are here for technology, but at the end of the year, they look at us from the ROI that we have given and not at the number of projects we have invested. So I think stables is really an interesting play that has come this time.
Raghav, you're building up here.
I'm sorry, I have to cut in here. In this space right now, crypto VCs have a horrible and notorious rep for dumping and draining liquidity from projects. Booking profits is great, but at the right time with the plan and letting the projects know what's up. There's so many bad actors in terms of the VC space and crypto space that ruthlessly dump. And there are cases where the projects go to zero because of this.
Wait. Do you guys see some kind of best practices that are coming out of this? I mean, there are leading VCs that actually do not deploy only capital, but also work with the startups. And there, I believe it's incredibly important to look at the long tail of the investment. If it's going to be market making, if it's going to be a buyback through the team or something else, rather than just dumping on.
Communication and what your thesis on the project is, right? Is it going to be 3 months, 6 months? What's your conviction here? That's what matters most in talking to the project and letting them know that, hey, we have a cash flow issue. We need to do this now. Can we do it OTC? Whatever it may be, but it's talking to the project and letting them know. And I'm not going to name names, but I'm sure people just going on Twitter or everywhere can see who the bad actors are.
So interestingly, when you say about dumping tokens, this is a very good discussion that I have had in a lot of groups. Why is the vesting schedule there? The team has thought about a vesting schedule, right? If you're not going to dump it now, you're going to dump it 3 months later, 6 months later, 9 months later. The project team first has to focus on building the project. If the project is so valuable that I need to hold my tokens, why do I hold my BNB tokens? Because there's value in there. So my point is, again, I don't dump, we use market makers. That's a different thing. And we sometimes don't even sell those tokens. But the point is putting this concern that someone is selling the tokens So I had a team which sent me a message that, you cannot dump the tokens, and second, you cannot, you have to help us in the marketing. I sent him the SAP copy. I said, show me the clauses where it says that. So technically, see, teams have to focus on building a good product and not on what the price of the token is. If it is a good project which has value add, the token price will also. I've run 3 startups in the past 15 years.
But I honestly still hope that there is going to be some kind of best practice which is going to come out where people can follow in order to make sure that not only investors, but teams and also the community in itself are as secure as possible. Gurraj, please.
The only one, you made a good point that there's certainly going to be bad actors in this space, that's any other space. But I think, wise VC teams recognize that, their reputation over a period of time they want to maintain and are generally intelligent in liquidating positions. And if they're not doing it, then, they are a bad actor. And it does tend to catch up because, it's still a relatively small community and our reputations, stick around. So, but the other thing with respect to stable coins is, it's been a remarkable and refreshing development over the past few years. The risk, and it's one of the things that the president worked on president working group on financial markets in the U.S. Indirectly alluded to is where the assets that are backing some of these stable coins. And there's one in particular, I won't mention their name because I'm sure it's well known. There's some concern as to whether their particular investments are in, somewhat illiquid securities. And if there were a run, that would be problematic, not only for the stablecoin itself, but for the system in general. So aside from that, I think it's been a pretty good development.
Okay, so I think we can agree that there's always going to be a couple of bad apples, but we should all strive to not be those, but try to do something better. So with this ahead, I would actually like to ask each and every one of you to share just in a couple of words to finalize the panel. What are you most excited about, except of the metaverse that we have heard literally 1,000 times right now today? So besides the metaverse, what are you most excited about in the next 12 to, in crypto, that's a little bit long, so 9 to 16 months maybe? Let's go with this. I would go with you again to start this off, just in a couple of words. Go ahead.
A couple of different areas, DAOs are interesting.
I like that.
Yeah, but I think, in terms of one area which relative to its potential size where it currently is, I think gaming. Gaming and sort of the convergence with gaming in a couple of different areas. It's a very interesting area. I think it's largely untouched. Axie, Star Atlas are some good examples, but the entire space is incredibly ripe for disruption and innovation in ways which I myself have not even imagined. So I'm very excited about that area.
I love those comments. Gaming, honestly, can you imagine, like, at least when I was young, if I had the opportunity to have some kind of income to support my childhood, that would have been amazing. So I love that DAOs. I believe that people are not ready for it yet, but please, honestly, I'm again curious. You get your turn. I want to hear from back corner first because we went that way, the entire panel. Go ahead.
So as a fund, I think we are very excited about the gaming play to earn things that have come. We've done some 6 investments in the last 1 month, from Spacey to Killbox to I don't know what all. Those are the ones which are getting us excited. Personally, I'm more excited about the Bitcoin mining that I'm getting into. I have deployed personally a lot of wealth into that. It gives me a regular 30% ROI per month. I don't care where the market goes. So yeah. I like stable income. It's simple. I don't want
nothing wrong with it. Absolutely.
From a fund perspective, I think interoperability of assets between virtual games is going to be a sector. Interoperability being a buzzword, IOTA, from 2017, etc. But I think the bear market will be very interesting when it comes. A lot of people are in here in crypto for the first time. It's going to be needed very soon, seeing what kind of market caps are reaching right now. These 1000x's, 100x's, extremely overvalued assets, they need to come down, be it NFTs, tokens, etc.
Okay, cool. Pranav, now.
So, all I can say is, we are extremely focused on the thesis, and this is something that we learned very hard way. And I'm just picking from what he mentioned, is that these are like multi-year cycles to get the technology right, the foundation layer right. And the value discovery will not happen through a one unidimensional, market. It's going to be over, a longer time frame. So in that context, we are extremely excited about focusing on our thesis of convergence, financialization, and virtualization. And in that context, making our investments. We continue to be focused on infrastructure, DeFi, tokenization, Web 3.0. We somewhere have a belief that at some point tokenization will see a lot of liquidity flowing in. We are very close to that inflection point, and we believe that the trigger for that would be regulatory action to see that how the DeFi and the NFT liquidity can a part of it, which is crossing the boundaries, can be channelized towards tokenization instead. And we'll see that a lot of infrastructure play in the tokenization will actually become extremely valuable, but extremely excited about gaming or gamification as a play as well. And we believe that metaverse is something which is for real. I mean, we can have long conversations around it, very mindful of the time, but we are extremely excited about metaverse as a play as well.
Okay, great, guys. Thank you very much for the panel. I
Thank you.
appreciate it. Thank you to everybody else.
Well done, everyone. That was fantastic. Wow. Photographs, everyone.